Good afternoon and welcome to the EQTEC PLC Q4 Results Investor Presentation. That was a recorded presentation. Investors are being listen-only mode. Questions are encouraged and can be submitted anytime via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to turn you over to David Plumber, CEO, Norman Barbour, CFO, and Jeffrey van der Linden, COO. Good afternoon.
Good afternoon.
Good afternoon, Paul. Thank you for the introduction. Well, I want to welcome again everyone to the EQTEC Investor Meet Company Q4 presentation. I would like to start just for new comers or new audience, with a little bit of a summary of what we are at EQTEC. So EQTEC is a world-leading technology innovation company specializing on the production of high-quality, high-efficiency syngas or synthesis gas. So synthesis gas is important in the energy mix because it's a highly versatile intermediate fuel that could replace or behave like natural gas. It's important particularly for carbon-negative baseload energy and biofuels. Our technology is proven, is patented, and is developed by us. Is carbon negative because we use, given the versatility of our technology, we use a vast array of feedstock that displace fossil fuel, typically waste streams that are found, locally wherever we build the plants. And the importance of baseload energy is because typically the alternative of baseload energy, which is the minimal energy that you need to produce into the grid, is at the moment covered mainly by fossil fuel plants, coal and natural gas plants. Where you have other renewables like solar and wind being a good backup for energy. They have fluctuation through the year that make them not fully useful to replace completely baseload energy or power. And for biofuels, because the synthesis gas is in its composition is mainly methane, hydrogen, and carbon dioxide and monoxide, and we could reform or extract some of these components from the synthesis gas to produce biofuels such as hydrogen or methane, or through a process called Fischer-Tropsch gas to liquids, converted into synthetic aviation fuels or other type of fuels.
So to start, I think we'd like to just take us back and re-anchor our thinking in the strategy, the roadmap that we shared in our previous webinar with some of you who joined us. This is what guides our thinking. It's what keeps us focused on how we need to develop the company, how we've developed it over the past couple of years, and how we need to develop it the next couple of years. Our goal at the far right-hand side of this page is to become a technology licensor and innovator. As David has just outlined, we have uniquely innovative technology here that we believe we are world-class at delivering. And so what we're focused on is becoming that technology licensor and innovator. What we have found, though, as we've developed as a business, is that in order to become that, we have to create the market for that. And although the demand is certainly there, it's structuring the supply side in terms of both the technology itself, which we more or less have in the bag, but then building an ecosystem of suppliers, of partners who can help us deploy, deliver successfully and to quality the plants that will run this technology successfully in a number of markets in Europe, in the US, and then into other markets around the world. And so really the journey between now and then is one about growing the business, taking our proven technology and proving it more often in more places, more successfully, building that ecosystem of partners, that global network that allows us then to go and deploy that technology successfully. Those suppliers and partners, of course, in the future will become our licensing partners who will then continue to bring that technology into those markets, but with less and less involvement from us. If you look at the small yellow arrow you see here, what we've called the hump, lovingly, is a very natural place now for us to be as a company. Because as I said, there's a real kind of bow wave of demand that has built up. We've spoken in past with investors and those of you who know us well about the growth in our pipeline. And the demand that we have is quite significant. And what we're building now is the engine to be able to address that demand, what we call the platform for growth. And eventually that will become a platform for scale. But the hump is one where, it's a chicken and egg challenge of getting the funding to deploy the technology. But at the same time, in order to get that funding, we have to show that the technology has already been deployed successfully. And of course, we have deployed it successfully, but the number of places we've deployed it, we need to grow. And that's exactly where we focused last year, going into Q4, and of course this year as well. And so a lot of the progress that we've made has been in what we call market development centers, which are showcase plants that will demonstrate that technology in a live environment. We have a number of other plants that we'll come on and talk about that we will deploy for other owner operators. And as we start to build those over the next year or so, we think we will hit a critical mass where we will have a number of plants that we have successfully deployed. And after that, of course, we will begin to build that platform for scale to go and address the wider demand.
Yeah, it's important what Jeff said. This is a natural position to be at the growth stage of the company where it is. When we're talking about the funding, we're talking about the funding for the infrastructure investment that is required for the large capital project investors in the space. And this is typically owners of infrastructure, owners that are operating energy producing assets. And this is these are very large organizations that start moving much lower and typically lagging to the market for two reasons. Number one, there is an existing legacy infrastructure that needs to be swept as an asset before they can shift into a new standard. And this is what we are looking in terms of the home. This is where we very clearly need to define in terms of other technology companies, in terms of engineering, in terms of technical people. The demand is there already. We have more demand that we can actually address, but the lagging effect is by building this market development center, by building these plants and this infrastructure initially to be able to attract then infrastructure investors and large owners operator of utilities to transfer all legacy infrastructure into a new paradigm shift where you see the hockey stick transition of what we everyone calls the energy transition. The energy transition, it will represent a significant investment in new infrastructure that will really accelerate adoption of technologies that really address decarbonizing the industry and reaching net zero goals.
So let's look a bit at our progress to date then.
Yeah. So this is, when we look at 2021, the most important thing is like we set ourselves certain targets to do certain outcomes that were very important for us to achieve this platform for growth that eventually, transitioning a platform to scale. So we set in terms of doing, R&D plans, we not only use them, very actively in 2021. We use the second half of the year. We have a number of tests that are also important for attract, tests for strategic partners, technology providers, infrastructure investors that can come to a full configuration plant like in Lorraine to test different type of feedstock. So that was a very active period in 2021, and it's something that we see continuing with that momentum in 2022. In terms of market development center, we set up that was a priority, particularly projects that they were there in a previous iteration of previous shareholder of EQTEC. So we acquire and repower with consortium those two projects, and those projects are aimed to be delivered in the second half of 2022. This is, we cannot emphasize enough how important will be the multiplying effect of having plants that we operate, that we can not only take people and financial investors and strategic partners to visit, but also, to train, to create centers of excellence, to create capacity building for local teams and in those markets. We also have in 2021 we have 17 projects under development on different phases of development, as we discussed before. or projects, the development of this project can be anything between 6 months to 18 months to financial close. And we're bringing more project upwards. So now we have project in the whole life cycle in different stage, in our development. In terms of on the construction in 2022, we have 5 which will carry on the construction in 2021, that will carry on, adding 1 more on the construction in 2022. And on the development, we're moving from 12 to 17 projects. In terms of revenues as well, I mean, this is still the phase of growth. We're not yet in the phase of scale. And even so, you can see, strong growth year on year. We'll see once we have this footprint of plants built, we compare, still, we will publish our annual returns in April, but you can see some estimated growth on 2020, and we'll go to market in due course on the annual result to show similar growth in 2022. In terms of markets, we were in 2020 only on 3 markets. We are already on 7 markets with strong local and joint venture partners or wholly owned subsidiaries. And we expect in 2022 to move to another new market as well. I mean, our markets as well, not only geographical, but we are moving as well more toward the direction of solution-driven markets for specific application in those geographical markets. In terms of local entities, we had 2 new local entities, as we discussed before, other joint venture subsidiaries in this market. We expect to have another 4 more to a total of 6 in 2022. And in terms of the team growing is fast to satisfy that demand. We're moving from a team of 30 people at the end of 2021 to a team that can grow between, a mix between organically and inorganically, between 40 plus 50, particularly in the technical team in 2022. In terms of the technical center, how is the split of that headcount? At the moment in 2021, we're still about 50-50 between the corporate center and the technical center, and we see a significant growth in 2022 in the technical center mainly. And this is also driven, one of the strategies to scale is to partner with strong larger engineering companies, like we discussed or we announced the partnership with Wood, and we'll see in 2022 more strategic partnership like that, where we could leverage their capacity and their engineering, their commoditized engineering capabilities to project, using our innovation and their delivery capabilities to grow and address the demand that we're seeing currently.
So before we move on, just a couple of follow-up comments here. I mean, one thing I think David's already alluded to, when we spoke last with you and as we've communicated over the past year in our various trading updates, our goal, back in 2020 was a lot about pipeline development. And early on in 2021, the size of our pipeline was such that demand continued to grow. And on the one hand, that's very exciting. But on the other hand, you have to be able to address that demand. You have to be able to address it not just by doing something, but by bringing the best of EQTEC, the best quality, and prove that not just the technology is a great technology, but that it can be deployed successfully and to the level of quality that we expect. So our goal shifted from pipeline growth then into pull-through. And it became more about how do we convert opportunities into projects, and then how do we convert those projects to a financial close project, build the plant, commission those plants, and then have them run live, and of course, clock the operating hours at very high levels of operational uptime that we would expect and that we've seen in the plants that we've built to date, and particularly the one that's been running for over a decade at Movialsa in Spain. So you can see the pull-through effect here from 2020 to 2021, that significant growth. You see it again from 2021 to 2022. We should add that the numbers we have on this page are the visible, committed numbers. And so, of course, particularly the back end of 2022, we might see 1 or 2 or even 3 things come into the frame that we don't currently see ourselves pulling through at this point. A lot of that will depend upon what David has said at the bottom end of this table, which is about the size and our ability, our capacity to address that. Now, partners are hugely important to us because, of course, they bring us capacity. If we can start to push more accountability down to our partners in various markets to do the development, to do the delivery, and so on, the more we can push to them, of course, the more we have an ability then to address that demand. What you're seeing down here at the bottom of the page in terms of the professionals line in brackets, you know, the plus 50 and so on, is our increasingly close partnership with CT3, whom we mentioned, CT3 Engineering, based out of Madrid in Spain. We mentioned them in our Q4 trading update. They have been a long-standing partner of the business. We know them very well, and they know us very well. They've worked with us on half a dozen of our projects already, and they do very high-quality work and at a very, very good value. And so as we kind of work more closely with them, and they buy more and more into what we're doing and what we're trying to achieve as a business, we feel confident here, and they feel confident with us saying they're an extension now of EQTEC. They're part of the EQTEC family, and they bring us enormous capacity, less on process engineering, which is our heartland, but more on civil engineering, mechanical engineering, and electrical engineering, all of which are absolutely crucial when we deploy our technology into an overall plant construction project. So that's a very exciting development for us as well. And as you can see, it brings us a significant additional capacity to ready us to pursue that demand.
Yeah, and also a great relationship in the sector, you know, with large EPCs, other technology companies, energy companies, oil and gas companies. They work with already with CT3 for engineering services. So another thing as well, in terms of the I think one thing that also is important to highlight in this review is the fact that we are thinking of scaling because it's an evidence of the maturity of the company as well. First of all, from a point of view of our executives or board, come from much larger businesses that we're looking what is required to scale at that size to have a multi-geography delivery capability, but also from a point of view that we are not worried to build the first or the second plan and hope that translate well from the lab to the real life. We have built plans, or CTO has designed for real life, for applications for the best part of 20 years. We have operational track record at commercial scale, and now it's all about how can we fulfill and control the quality of that delivery in many more geographies as we require for scale.
So before we talk about how we're going to move forward to scale, let's talk about what things looked like in Q4.
So as David and Jeff suggested that there have been significant progress made in 2021. I think we just need to step back and say that what we planned out to do at the beginning of the year and what we actually ended the year with. I think one of the key aspects was the market development centers. I think we all know that the plant on the ground is the most strong message with regards to the commercial viability of the technology. So we said that we would be repowering some of the previous plants. So there are 2 plants, one in Croatia, one in Italy, with which we are actually pressing ahead. They'll be operational in 2022. With regards to the other plants, we are also making strong progress. And also, I think, coming back to the point which Jeff, you mentioned earlier regarding the capacity to deliver multiple projects at the same time. So not only we are repowering the MDCs, but we are also a lot of other plants under construction. So 3 of them are under construction. There would be additional plants which will come under construction in 2022 as well. I think what also we have been looking at is moving from syngas to looking at all the applications and the offtake solutions, because the market that we are currently in, it's not about getting the pure synthesis gas or availability of that as an alternative, but also making sure that all sorts of biofuels or other applications of that in the industry that we have and the challenges that are there to achieve the net zero, we actually go through that process and make the syngas available for those applications.
Just before we move on that one, I think it's important to note as well, we announced in December that we were on our own deferring work on D-side and Billingham for exactly the reason that Noman is identifying here. David said at the very outset of today's presentation, that syngas, the versatility of syngas in general, but also the specific efficiency and the quality of the syngas that EQTEC produces, put us in a very, very enviable position in terms of pursuing these markets. Now, that's theoretically interesting, but in fact, what's happened is very, very quickly, as we've gone out and started these discussions, moving on from heat and power or combined heat and power into talking about hydrogen, talking about synthetic natural gas, talking about, for example, jet fuel. As we get into these types of discussions about advanced biofuels, what we're finding is a few things. Number one, technology partners are very, very keen to talk with us because they're fascinated with it. And they're very good at the downstream application, the syngas to something. But where they are struggling is getting a high quality, high efficiency synthesis gas that enables them to do what they do well. And, we won't mention names, but there are a number that you can read about in the newspaper every day who are struggling for that very reason. That represents a great market opportunity for us, and we are going after it. The second thing we found is that the UK government, in particular, has made great strides and they're pushing very hard to look at what is the best solution for hydrogen. They know that electrolyzers are expensive. They know that there is a market for that, but it's several years down the road. And we were delighted to hear that the UK Department for Business, Energy and Industrial Strategy, BEIS, have now named gasification as their preferred technology for hydrogen and advanced biofuels. That gives us an enormous opportunity again, and we have got into conversations with BEIS, so they're well aware of who we are and how we want to pursue things. So later on in this presentation, we'll come on and talk a bit with you about some of the language that we're using, some of the key aspects of what we do that we're beginning to highlight more for this marketplace, because what we see there is great opportunity for us, and we are actively going after it.
Yeah, and I think one thing that is important we say as well, I mean, the pivot and the attention to synthetic natural gas, hydrogen from our point of view is something that we have always discussed. I mean, at the beginning, this is a market that's moving very quickly, but at the beginning last year, even we were talking about that it's still too early for that market. And the reason being that we want everything that be driven by a commercial demand. So it's very interesting to talk about the hydrogen economy of the future, but where can we create current commercial demand to be able to accelerate that? And we see that mainly in industrial applications. Before we're going to be putting hydrogen into buses, before we're going to be piping hydrogen in fuel cells, throughout the world, you're going to have localized demand for industries that require, like fertilizer industry, that require ammonia to produce fertilizer. They have very clear current needs that they have that commercial demand. So that's what we focus in that. That's the reason why we are seeing a great opportunity to reconfigure some of the applications in Billingham. This is what the project in this side is also so interesting. And also now, the accelerated interest also from the local and central government on the project in Southport. So, yeah.
And since we've raised it, shall we just pause a bit and talk about both Billingham and D-side? I mean, I'll start by talking about Billingham, and perhaps David, you as a project executive on D-side can talk about that. I mean, they both remain extremely exciting projects for us, and we are full steam ahead on both. Full steam ahead on what? In the case of Billingham, we've got an amazing location. We're surrounded by large-scale industry, and we're in conversation already with a number of those local, with those neighbors, as they like to call themselves. It's a vibrant, if any of you are familiar with the Teesside industrial, area up there, it's quite a vibrant area. It's a heavily networked area, in that they share a network for carbon capture, for CO2. They share one for other things, and of course they're building and extending a new hydrogen network. You will have read that BP are getting involved in there, as are a number of others. So it is a very vibrant place to do large scale plant that we have planned. Those designs are done at a level. We've been working very closely with 3 large tier 1 EPCs who have been very actively looking. 1 or 2 of them in particular, we've been working side by side with for over 6 months now, really looking at those plans and how we develop those and take them forward into FEED. But before we get too far into FEED, what we've discovered is actually there is a wide range of potential offtakes that are of interest to the market up there. Now, to be fair, for the reasons, some of which Dave has just outlined, hydrogen is very interesting, but the market for it is still quite young. So we have to look at the trade-off between Will some of these industrial companies buy hydrogen? They're more likely than any kind of consumer application. But will some of them buy hydrogen now, or do we need to wait a few years for that? And how is that going to work? And or are there other offtake applications that will fill the gap before hydrogen becomes truly high demand for those businesses? And so there's kind of a thinking through of technically, to what extent can we build a plant that does one and then another? Is that prohibitively expensive? So we've got to think through a number of these different issues, and more than think them through, we need to model them through and look at what kinds of impacts those have on an IRR over what periods of time. And so there are a wide range of variables, and we've got our own commercial leads, we're getting subject matter experts, and most importantly, we're trialing these with some of the relationships we've built up in Billingham to start to look at what the best possible model is. The last thing I'll say, and we've said this many times before, particularly about Billingham, but really about any of the large-scale plants in the UK we're pursuing, the number one objective here is to do them extremely well. We're not in the game of rushing these just to have a plant that we can look at. The smaller scale plants we have in places like Croatia and Italy, as Noman mentioned, or in California or in Greece, we can move much more nimbly on, and we'll, I think, gain much more momentum. And those 12 to 18 months that David has mentioned, we'll see development periods shrink as we build more and more of those. In the case of these larger plants, and building
also it's easier on the small plant to retain full control of the whole integration. In large plant, you need to work with a much broader stakeholder group, and by doing that, it's a great opportunity as well. It's a great risk of managing that stakeholder integration, but also it's a great opportunity to attract more strategic partners and to be able to have a bigger audience from technology partners, from investors, from infrastructure partners, where can look at what is the applicability of the technology for large capital projects. So, that's a great opportunity. I mean, we have not just, one or two projects that we need to build to prove, but we need to use every single project in our pipeline to showcase not only the project build, but the process to build a project, the iterative discussions with partners to engage them, to discuss the realm of what is possible commercially, technologically, and also in achieving, the carbon reduction goals that we all have.
And forgive me, I'll just throw in, you mentioned that we, in the future, will be moving, from market verticals, which we have now, gradually and potentially solution verticals. And the solution we are deploying at Billingham right now, for example, is a dramatically different solution. David's just outlined some of the reasons. The economics work very differently. The stakeholder group is very different. The plant lifetime is very different, and the dynamics of that economic model are very different. That business model changes. So the solution that we're building there versus a small scale distributed set of plants that are almost identical, for example, in California, to do something quite different. These are all different solution models. And so to David's point, we have to showcase that business model well, not just show that we can build a plant. And so for all those reasons, we would not defer these projects if we did not feel there was value in doing so. We do not intend to drag out timelines, quite the contrary, but we want to get that model right, get the stakeholders aligned with us in that thinking, and then proceed at pace to deliver the quality, but also prove that business model in reality.
And I think one thing which is important to mention, as David suggested, because there are so many stakeholders involved, obviously there's a lot more consultation on fine-tuning the final solution on the project itself. I think in terms of, Jeff, you were talking about the fact that we need a model to have a good decision support tooling in place to move them in the right direction. I think even for that, testing some of the commercial assumptions in the market for something like hydrogen, which is up and coming, is also very critical. So we just want to make sure we have the correct data points, we're modeling them right, and coming to the right decision for the overall shareholder value accretion.
Absolutely.
So we comment on this side.
Yeah, on this side, and then I'll make a general comment on all the UK and the large capital project. In this side is also very exciting. We are now maturing the relation that we have with Logic, which is our strategic land partner on the side. We had the opportunity as well. I mean, this is a perfect example where Toyota, it was looking for the offtake of the carbon negative gas and renewable power that we can provide, and they wanted to put electrolyzers on site. to then use the renewable power to produce the hydrogen. And then we just went, well, hang on a second, we could, depending on what the application of the hydrogen is, let's do a feasibility if we can provide the hydrogen from gasification, and from an upgrading of the syngas into hydrogen. And this is what we're doing. I mean, there's still very anecdotal market impression that you can only make high quality hydrogen from electrolysis, which obviously, that's true. You get 99.9% purity of hydrogen, but you could do the same at the cost point of electrolyzer. You could do the same upgrading from syngas as well. And at the moment, it makes sense for us to do the analysis because we may come even at a lower price than electrolysis. We have already completed a feasibility from a planning and health and safety point of view. If we can have hydrogen from syngas in the land next to D-site, which was very positive, and we expect in Q1 discussing with some of the technology partners to select who could be working on the technical and financial viability with us, with some of the engineering companies such as Wood that has been announced and the Vesta subsidiary. But the important thing is like as Jeff was saying before, all these technologies that come from petrochemical, mainly for midstream oil and gas, are pretty established using fossil fuels to separate methane from coal gasification or for crude gasification, or separate hydrogen to water shift units. The key now is to bring that expertise and that process expertise in petrochemical with a partner that has the innovation capability and the production of the versatile and to specification production of syngas, to be able to integrate this and then just deploy this solution in many places. One more thing that I would say about that, which is general to all the project, is we have a complex, the process of the plan is complex, but also the business model to scale, it can be perceived as complex. And at the place of stakeholders that we have in this project, there's still a lot of confusion in the market. I thought you were talking to, a utility partner like an IDEX or an E.ON, and now you're talking to a Metal Energy or a Kibo. Everyone has a place and a time in the process. You have funding partners at project level, which are funding partners that need to deploy capital to build this project. These are large, either owners, operators of infrastructure or infrastructure private equity investors. All those conversations have in fact accelerated. We're talking to more utility companies. We're talking to more oil and gas companies. We're talking to more infrastructure private equity investors. And that is the lowest capital to arrive. Those are very large institutions that take a lot of time, and they are the ones that have the lowest tolerance to risk. You have a precursor to that, which is the development partner, which is to co-invest, capital in the development phases. As we say, one thing that was important for us is to initially, we were using the development capital to catalyze some of these projects to completion. Now what we're seeing, there's opportunity to sell the project SPVs or equity early on the project SPV while retaining, the direction of the development choices, et cetera. And this is where you have companies like, the discussion that we have with Kibo, with Metal Energy, which are companies that are pivoting. They are companies that have a small cap companies in a fossil fuel or a mining environment that is quickly being disrupted. They are pivoting on being developers of projects that are part of the new energy mix, where some of the experience of developing power project in fossil fuels is transferable to a sector, and where they are willing to put risk capital at the early stage of the development phase. So everyone has a time and a place. People are also asking, you have a technology partner. It's a 40,000, employees company, global reach. They're going to go and finance Billingham. That's not the way it works. Engineering company, technology partners are engineering company, technology partners to provide engineering and validation and structure on delivering those projects. Infrastructure investors, owners, operators of utilities are owner operators of utility. There's a number of stakeholders, and they are all required to be able to take this project to completion, operation, and successful, production in the future.
And just briefly, I think it is also important for us to understand that our team is always pushing the boundaries once it comes to the applications. The R&D tests which are being conducted at University of Lorraine. We have been looking at different feedstocks. We're looking at contaminated plastics, which obviously attracts a much higher gate fee. It allows us to provide another alternative to what the other solutions out there in the market are. So we're always pushing those boundaries, and we'll keep on doing that. We've got a 3 to 5 year plan from 2022 onwards to keep on doing that further as well.
Yeah.
And I think
just to add in the R&D and the importance of that, probably is worth saying what is contaminated plastic. Contaminated plastic are typically those plastics that come from containers that were holding either hydrocarbon, oil, paints. That is very interesting niche market in the UK and globally because they are not willing to be taken by incinerators anymore. And we know the problem with incinerator generally. And it's not a plastic that you can typically recycle easily because of the hydrocarbon content of it. So by doing tests on that, number one, we reassure the partners that are coming to us with this demand. But remember, the important thing here as well is like we can just go and show how accurate our computational model is. Like, listen, we model on a simulation what is going to be the composition of the syngas for the contaminated plastic, and then go to Lorraine, do the actual process, and see how accurate our predictions were. All of that build confidence, all of that big traction with all the important stakeholders for this type of application.
And it also ultimately flows through to the revenue growth that we are seeing. On the previous slide, David, that you mentioned, how 2020 numbers were 2.2 million euros. Now we have kind of jumping to 4 to 5 times of that amount. And we will see similar sort of multiplier effect in 2022 as well. And the journey will continue till the time, we have built that scale. So I think that is all good foundations to deliver the strong revenue growth that we are currently focusing on.
Absolutely, and it's important. I mean, we like that we are judged as a much more mature company in terms of disciplines and revenue targets and EBITDA, but also we need to understand that we are miles away from just a pilot scale type of test of all the technologies that are out there, much more from a point of view of hype of potential growth instead of just a proven technology, and now thinking how can we deploy this at scale. So the fact that we can show strong revenue growth while we are at that investment for scale phase, is very encouraging, and I think is important in the current market because the market are taking a much more defensive position where the investor general institution are going to be a lot less forgiving to companies that are going to be loss making for the next 10 years, and they're looking someone that have a horizon where is at least there's a good balance between reinvestment in scaling, but also in terms of controlling cost and negative EBITDA. We have also increased, the capital deployed has significantly increased or assets as well on the book. So the important thing is we need to deploy capital efficiency in a way that generates the maximum growth and return also from investors to become more attractive in the sector.
Good.
Fantastic. Thank you very much indeed for your presentation.
I'm afraid we're still going.
I beg your pardon, sir. I thought you were handing over to me, so I'll be quiet. Thank you very much indeed.
We have 2 more slides. So we'll be quick on this slide because I think this is a relatively straightforward one, and it kind of alludes back to what we were saying about moving to scale. We cannot wait until the scale requirement comes knocking. Once we've got over that hump we talked about earlier on, we will be forgiven less and less for not addressing the demand that we see growing for what we do. And therefore, as we prove, not just that the technology is great, which is already proven, but we prove we can deploy it successfully time and time again, and indeed deploy it more rapidly, with different variations of different types of feedstock and different types of offtake, as we've just outlined. As we prove that, we will need to be able to scale. And so rather than waiting, we are already setting in place the structure that will allow us to go after and pursue that demand. So these 2 little diagrams here help bring to life, perhaps, where we're focused. On the left, you see what we call our go-to-market model. And there are 4 really critical factors that we believe we have to get right in every market to be successful. At the core of it is a joint venture or some other subsidiary arrangement. We started, I think a year ago, we were talking to you about go-to-market partnerships. Those partnerships we're converting now into either wholly owned subsidiaries, as we will put in place in France this year as one example, and probably in Italy as well. But also, we put in place majority-owned joint ventures, as we've already announced in Croatia and in the Aegean, for Greece and other adjacent markets there. And we will put in place in other areas as well. Behind that is a strong MD or managing director, but indeed an entire senior team, effectively a David and Noman and Yoel and Jeff in every market, who we believe don't just have the understanding of the technology, don't just have the local relationships, but also have access to capital and have access to routes to market that bode well for us in terms of their becoming licensing partners in the future. And so these are people who have the commercial savvy to establish and grow a business in each of those markets. Behind them is a partner network. We've talked about the ecosystem we're building. We need to have the partner network locally. So we will have local partners, and we will spend our time also building the multinational partners who we can deploy into multiple ones. And between the two of them, we'll have a reliable, repeatable capability for deployment in all of those markets. And of course, topping all of this off will be a market development center, an MDC. That's the showcase facility we're putting into Italy this year, we're putting into Croatia this year, and then we will go on and put into every other market so that we can use that to bring prospective customers, to bring partners, and as David said, also to train and certify, EQTEC certified, people to do maintenance and so on. If we look at the right-hand side, that's how we look as a group. If you move the camera out and look across all of us as a group, we are going into these market verticals, which are our revenue and profit centers. And horizontally, we will always, as EQTEC, provide the innovation, provide the licensing, and provide the maintenance in so much as we will be the ones who certify whether or not a local maintenance team can do maintenance on an EQTEC plant or an EQTEC power plant, if I can put it that way, based on being certified by us. When it comes to funding and commercial and development and delivery, we want to gradually see the verticals take that over, and we want them to be leading and in fact be self-sufficient for doing any of those things. We are not there right now. We are still in the position where we as EQTEC are providing a lot of that support, but we are seeing in specific areas, particularly in some of the countries I've just mentioned, that more and more they are able to take on funding and commercial and some of these aspects. And that gives us, a strong confidence that we're building independent vertical markets that can take the work from us, and we can then be ready to move to scale.
Yeah, and I think this again talks into the maturity of the business and the executive team, and when we are in a growth phase. I mean, each of these go-to-market entities or model, I think we mentioned that in an interview not a couple of days ago. Each of these ones can be in their own merits, an IPO or a very large viable business in that market. The beauty of this model is like some of these ones, as we say, we may end up doing 5-10 projects and then just find an alternative because they are not exclusive. But if they grow in a certain scale, they can become a licensor, IPO in a specific market. And this just also builds a lot of resilience in the model of the group. And this is, as we say, I mean, it was only less than 2 years ago that we're talking about qualified pipeline and the pipeline that we're managing centralized. Now we can already start to talk about a pipeline of go-to-market entities that in itself are developing pipelines of projects. So we are creating our own market, and also we are creating our own future licensors, and we are creating the blueprint for a market. So when the larger guys come to place looking at it for a acquisition of the technology, a licensing of the technology, or an acquisition of the whole group, we'll have very well established protocols, documentation, and commercial structures to be able to reference to.
So I mentioned earlier on, what we'd like to close off with is a bit of a refinement of how we talk about EQTEC. Given some of the things that we've said, on this call, what we talk about in terms of what EQTEC does and will do for the world is going to change. Now, on the right-hand side of this, you'll see our ESG framework. Some of you might have seen that we launched this just last month in January at the start of this year. That was following quite a lot of work at the back end of Q3 and in Q4 last year, thinking through the role of ESG for a company that is itself on the ESG agenda of other companies, but also the responsibilities of a company such as ours when it comes to ESG. And so if I just outline very briefly the key components of that, we say that we're grounded in commercial responsibility, and we start with that at the very bottom of it, because everything is built upon that. Number one, we have to be commercially viable, because if we're not commercially viable, we can do nothing to help the world. And so that is at the core of what we do. But we also have to be responsible. And that means everything from what Noman is setting up in terms of our corporate governance capabilities, the way that we run our compliance, the way that we comply with not just the places where EQTEC has its home in Spain, in the UK, in Ireland, but also in every market where we do business. And therefore, this extends right the way through the group. It also means we have to look after our people, and we have to make sure that they have a good environment to work in, that they grow in that environment. And of course, health and safety is absolutely crucial for a company such as ours. We then say that built on that is what we do at our heart, which we're calling carbon engineering. Now, we talked earlier about syngas, and the fact that that is ultimately what we produce as an intermediate fuel, to power baseload energy and biofuels. But the way we do that is through what we call as carbon engineering. And there are a lot of companies out there that are doing engineering around carbon, but the core of what we do, the chemical engineering capabilities, are what really make us unique, because we really do understand all of the variables end to end through the entire process that we deploy. And we really need to be louder and clearer about our ability to do that, because that creates a range of opportunities for us that most other or all other alternatives in the marketplace do not have available to them in the same way.
Yeah, I think that was a good point to make, and what we were quite excited to when we came out with carbon engineering as the DNA of the source of it, the seed of this, is because where many companies out there, and companies that we're partnering, which has a place and a time, which are doing engineering of equipment or something to address a problem. When you look at the process of how we decompose a feedstock and how we produce the syngas, and then how can we produce more methane or more carbon or biochar, it comes down to look at the chemical reaction at carbon level, which is the most prevalent element in the periodic table. So it's very interesting, the ability to really, when you see our team of scientists working on that, they are looking at exactly how can we reconfigure carbon molecules to create methane instead of carbon, or more carbon instead of hydrogen, et cetera, et cetera. So this is at the essence of what we are, and that grows the other stems, let's say, of our ESG strategy.
And so those stems and the leaves and continue the metaphor as you like, but those will all change and evolve over time. But the two things that will not change is our commitment on the one hand to sustainable communities. We have increasingly a local proposition. Despite the Billinghams and the D-sides built in large industrial areas, they're still local, and those customers are still very local. But when you get down to the Southport one, which we've highlighted in our trading update, when you get into Croatia, when you get into Italy, when you get into Greece and California, and you look at the small scale plants that we're able to build where the feedstock is located, not some big central place where you have to transport all of that stuff in, but actually in those very local areas, we have a strong investment in supporting those communities. We create local jobs, we create local well-being, we provide energy or biofuels to that local community. And so therefore, we will do a lot to focus on those local communities. And as we meet with representatives of those communities, or indeed get them involved directly in our project boards, as we've done in California, we will have that commitment to sustainable communities. And finally, of course, perhaps the most obvious is the clean world. We are building carbon negative plants, and we will say more and more about how we're doing that in a way that helps us reach net zero and deliver, a clean world. So very quickly on the left, and guys, please jump in, but we do believe net zero is real. We do believe that, even before COP26, but certainly coming out of COP26, there is a large scale bow wave of commitment behind reaching net zero by 2050. We've been disappointed with the fact that things like natural gas, which is a fossil fuel, are now being viewed as acceptable for reaching 2050 targets. And we will speak about that, because we do believe, as we've said, that there are alternatives, and we should be inspiring innovation, new solutions, not going backwards to older ones. So we know that there's a huge gap. Between now and 2050, we've priced it around with McKinsey at around $98 trillion. Because to reach 2050 right now, there's an enormous gap. We can't currently do it. We think we're part of filling that gap, and potentially a very big part of filling that gap.
And I think one thing which is very important to mention is that where we are as EQTEC, it's not about the technology anymore. It's about pushing the boundaries, innovation, and getting onto that scale platform as commercially quickly as we possibly can, by staying capital light, because at the back of our minds is always that we want to make sure we do these projects by not investing too much capital of from EQTEC, but leveraging from the funding pipeline and the partners of what we have been incubating for the past 12 to 18 months.
Absolutely. And it's always how to use the resource efficiency. If that resource is carbon, or if that resource is capital, is about efficiency and move into profitability as quick as possible, because that is what really accelerates adoption. We always say, science projects are great, they have a time and a place for philanthropy, for venturing. We need to accelerate solutions that are commercially viable today, and I think that's very important. Conscious of the time, we may need to start.
Yeah, I think we've commented on the next three, and I think what Noman has just said really brings out the last, which is our primary business is not the technology. It's proven, it's ready, it's there. As David said, the innovation we're driving will keep us at the forefront. What we need to focus on now is getting the business going and proving we can deliver that technology in practice so that we can scale.
Yeah.
Now we're done.
Jeffrey, thank you very much indeed. Sorry to interrupt you earlier. Thanks again for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. Just while the team take a few minutes to review those questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Before we perhaps touch on some of the live questions, we did receive several pre-submitted questions. If I may, David, I'll start with you in the first one. It reads as follows. In the previous live presentation held during Q4 2021, I expressed concerns with the front-end CapEx loading of a large number of projects and the potential delays of the project delivery, potentially creating cash flow difficulties. The current business model seems to be reliant on EQT funding projects in order to showcase the technology. Is this sustainable with current cash flow projections for the company, and how long does the company need further capital raised during 2022?
I think we addressed that in the conversation. I think we make clearly the definition or project, and we don't intend to invest in the project at the infrastructure level. So that's where is the capital heavy investment, and that's an infrastructure play. And although it's a very interesting play with the IRRs that we have, the level IRR that our project have, that's not the game that we're in. We want to be a rapid scalable technology, in fact, being involved less and less. Where we use capital is on the development phase, which in comparison with the typical CapEx is a small portion of capital for the value created both on the infrastructure and on this potential sales to equity. Now, at that level, what we are showing now is by bringing other partners and other development partners, including listed companies that we mentioned, Kibo and Meta Energy, which are able to raise money on their own balance sheet. The small capital required for the development in comparison, we're not talking about hundreds of millions, but we're talking about hundreds of thousands to millions. This is something that we are doing, in fact, being more efficient with the capital that we deploy and being able to redeploy it for creating more value. In terms of the capital raise question as well, I mean, we said this before, it's all about efficiency of capital. Again, at the right valuation with the right dilution for the right use of capital, we are a public company in the public markets. We will do that if tactically becomes interesting or important to create value. It's not something that we're doing to keep the lights on. It's something that we're doing to generate more value like we've been doing. In terms of the share price, to a certain extent, the share price will do what the share price does. In terms of the drop in the share price since the last year, this is a drop that is sector-wide. If you look consider proxy energy transition stock, we receive weekly updates from the likes of Natixis, JP Morgan. Everything has come off a cliff for about 60 to 65% of where it was. That was a lot of hype. I think we were undervalued against our peers then, and I think we continue to be significant undervalued against our peers now. but the whole sector has moved, has readjusted, and eventually the penny will drop. I think there's still analysts in the market that don't understand our business model, don't understand how sophisticated and well thought is this strategy to scale, and that time will come.
Fantastic, thank you. The second one we had here for you, actually, Jeffrey. How close is financial close on Billingham? The LPA needs to be paid by the 26th of February. Can we expect close this month?
Yeah, it's a good question. No, I think it's unrealistic to expect financial close this month. Just to confirm the facts about the land purchase agreement, the LPA, the backstop date that was set at the time of the agreement is the 26th of February this year. That is something that we set as a matter of comfort between the two partners. Obviously, we have to take that very seriously. But the other thing that the two partners, we with Scott Brothers, take very seriously about the land is how to get best value from that. We talk fortnightly with them. Our project development manager, who's on the Billingham project, speaks regularly with the leads from Scott Brothers. And so, they are very well aware of the status of the project, and they're also very well aware of the choices we're making and the value that we're targeting. So, we anticipate that we will continue to have very constructive dialogue with them, and that we will come out with the right answers together. And of course, as things change, if they change, we will make the appropriate announcements to the market accordingly.
Yeah, from a legal point of view, the land purchase agreement had condition to be satisfied that they were just built in for these reasons, and the condition to be satisfied or to be waived by both parties. And we both have a vested interest to maximize the value and the appeal and the profile of the project. It will benefit both parties. So we see that as it was intended to be drafted like that.
Fantastic. And the final pre-submitted question, I think you just covered off really, David. Do you think the market has faith in EQTEC given the current share price compared to the December 2020 highs? I think you have covered most of that off, but is there anything further to add? If not, if I may, I know we haven't got too long left, but if you could click on that Q&A tab, and where appropriate to do so, just read out the question and give your response. And just to remind all the investors, of course, all the questions that you've submitted today will be available for review by the company. We will publish responses back out to you.
Okay, we'll try to do really rapid fire. First one is, what are the high margin feedstock being considered at Italia MDC, and do you need to change anything technically to accommodate a new feedstock recipe? High margin feedstock means that added by cost or gate fee of that feedstock improve the financial model and the returns on the plant. So some of them could be a reduction of the cost of the feedstock or an increase on the gate fee. We are looking at some of them, and we are ready from the beginning work for versatility and the additional infrastructure required for those projects. So we are looking for us, a priority is not to miss the operational date in 2022. So improve the financial model and keep with the deadline to build the plant and commission in half year 2022. Next question, what step are you going to take to improve shareholder value? Deliver on our strategy, scale and, have more project in financial close and continue to do what we're doing until eventually the market or the large entities that we are in discussions the penny will drop, and then will be, value will be obvious.
Shall I take the next one? So I think the next question is more around the revenue that has been billed on Belice and Kaloesh, whether that came through in 2021, and if the cash has been received. So the answer is that yes, the revenue was billed in 2021 because we had met certain milestones for which we had built the revenue, and the cash will come in line with the payment milestones on the invoices themselves.
Same in Kaloesh.
Yeah, and same in Kaloesh as well.
Then with the syngas to hydrogen plant at DISA, use standard pressure swing absorption technology. It's quite technical. One of the consideration is that it's a combination of water shift technology. It depends on the upgrading that we need to do on the side. We're in discussion, as I say, we mentioned before, with Vesta and a number of very well experienced technology partners on that.
No, this is all the same.
Okay. So I think Billing and Kibo Energy have been lined as a partner for the project. A number of investors have concerns. I think we covered this as well. This is the point. I mean, we are not expecting either Kibo or Metal Energy to take the lion's share of the capital stack of any of this project, nor do they. I think this is just they have transferable skills on the development phase in terms of negotiating power purchase agreement, in the case of a network that could be relevant for the projects, and co-investing and taking equity on the SPVs that we would like to offload the majority equity holding from the point of view of EQTEC as soon as possible. So I think that's the role that we. A lot of the, let's say, I cannot comment from the other companies, but a lot of the probably perception of both of companies. I mean, we see in the broader, fossil fuel companies transitioning from there. There's a lot of value destruction that has happened because of the approach to investor now to coal, and oil and gas is kind of coming back in fashion with increasing prices. But this is market driven as well. So we cannot comment on why the perception of these companies is. But usually investors, when they lose money, they are not very happy. That's just a fact of life.
Okay, and then I'll take the next one. Is North Fork still considered an MDC? And when is this forecast to be commissioned? I mean, look, we will definitely have an MDC in the US. There's no question about that. In terms of whether it will be North Fork or not, well, as the first plant, it's a very good candidate. So I don't see why we wouldn't do that. But I wouldn't say that we have formal plans yet to announce it as an MDC. Without a doubt, though, we will want to showcase. In terms of when it's due to be commissioned, we very much hope it will be commissioned this year. And we know right now that work is progressing out there. We've had an update only this week. And we're talking to them, of course, probably every other day. So, we will keep you posted on that. And we very much hope to have it commissioned this year.
Then how efficient is your process compared to other gasification companies? Like, I'm not going to mention other companies, so don't make a direct comparison, but would you be able to keep ahead of the competition? Well, first of all, this goes straight into the discussion that we had before. We have 60 different types of feedstock analyzed accurately in our process. Plastic is one of them. And you fill the blank with whatever that is. We design the process. We don't have a kit that was acquired from a research institute or a kit that was acquired from another technology team or a team of engineers trying to reverse engineer other technology. We have our own technology developing house with the same team that has been working. The three of the PhD have been working together, including our CTO, for the best part of 20 years. So we will create part of what we talk about solution driven. We will spin off this solution, which are companies like the one that you're mentioning there, which have a single feedstock solution for a single application, being offtake of whatever that fill the blank, hydrogen, synthetic natural gas, etc., etc. Then a new plant has not been commissioned for some years. How confident are you that testing and commissioning risk are well managed, and will there be insurance? You want to answer?
Yeah, no, it's a very good question. I mean, this goes back to what we were saying about needing to prove that we can deliver this in practice. True, we're very confident. And yes, there is technology insurance on some specific plants where viable. We also have certain instances where we're talking to tier 1 EPCs who are willing to wrap the entire thing. That's how confident they are. That's how confident the insurers are in the technology, where they have done detailed technical due diligence. So we do have that. But in terms of moving ahead, yes, absolutely. We have maximum confidence, and quite the contrary, we are. Oh, thank you. Yeah, we are ensuring that we don't move ahead if we don't have that confidence, and that is why we are ensuring that we get these things right.
Yeah. Another question is why Spain is not a target market given the plant and relationship there. That's interesting. It's all about the good question is all about having that elements that make a go-to-market partner there. This may change very rapidly. It may fast track, but it's a combination of the commercial environment from tariffs and also in terms of having the right development of project teams and having the type of project that we would like to pursue that we can prioritize. That's the reason.
I like this question. Are biofuel synthetic methane future prices more profitable than current power purchase agreements? It's a fantastic question, and it's the heart of exactly the work we're doing right now. I mean, the shorter answer is it appears yes, but the point is there a buyer for all of these things who we can get active in the next couple of years? So we're looking at a wide range of opportunities, even at an electricity angle, whether you put it in the grid or whether you sell it to a private wire, you're looking at different price points completely. We therefore are also looking at SNG, we're looking at hydrogen, we're looking at biofuel, other biofuels, but critically, it's not just the price point we can hit, it's also the cost of production that we have to look at. And so all of these things get factored into our quite sophisticated financial modeling. And that is exactly at the heart of what we're looking at right now. So we look forward to answering your question in greater detail.
Yeah, and the last question is, as gasification is now seen by the government as primary way of reducing carbon, and EQTEC, a global leader, what's your plan for getting government contracts for plants around the UK? Not only in the UK, but that's why we're in conversation and discussion. There's a number of interesting opportunities, and we are now at the table that we were not before. We were with our heads in operations for a while, and the back end of last year and this year we are much more as an advisors. We're much more as a also older brother of new thriving technologies in carbon capture, in AI for carbon accounting, et cetera, where we can use our plans and our expertise to accelerate their growth and work with the government as well. We're in discussion with the Department of Trade and Industry as well to look at interesting partners. We are, we'll watch the space. I mean, it's still early.
And I think we've just gone through the hour, and thank you very much indeed for all the questions you have answered. And of course, there are any further questions that do come through, the team will have the ability to review those questions. We'll publish responses where appropriate to do so on the Investor Meet Company platform. Before redirecting investors to provide you with some feedback, which I know is particularly important, perhaps I could ask you for a few closing comments, please, David.
Well, I mean, I think I want to say, first of all, thank you for the interest in our company from existing investors, new investors, and from change makers all over the world. I think we really appreciate the trust. We just want to say that the way we are repaying that trust is we have a very committed team, EQTEC, everyone from top to bottom, sideways, put in incredible quality of work, incredible time, from the engineer designing the vessels to the PR efforts. Everything is taken consideration. We take very seriously our mission. It was a pleasure to do our ESG strategy statement, because really brought to life the fact that ESG for us is not just a nice addendum or a veneer on top that you need to do, but ESG is core to our strategy from scale and grow. And when we say that we are not building more plants in more places at the speed that we should, it's just because the world needs this for decarbonization, for net zero, and for the energy transition.
That's fantastic. David, Norman, Jeffrey, thank you indeed for updating investors today. Can I please ask investors not to close the session, as you'll be automatically redirected to provide your feedback, and all the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team at EQTEC PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon to you all.
Thank you.
Thanks.